GM, good morning. Welcome to the Milk Road Show, the daily crypto show where the ride is terrifying, the ups and downs are sudden, and we're the seatbelt, keeping you from ejecting. I'm your host, Jay Hamilton. It's Thursday, April the 10th. Wow, 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 wow. I called it earlier this week. I was like, please, Trump, please pause tariffs on Wednesday. And he did, everybody. He paused tariffs, kind of. It's always messy exactly what he did. We'll get into exactly what he did. But hey, markets bounced. I mean, they bounced right now. By the time you guys listen to the show in a few hours, they might be down again. I can't keep on top of it minute to minute. But what we want to talk about today is we're going to talk a bit about macro and what is going on there. And then we're also going to talk into what is one of the topics I keep bringing up right now is, okay, macro is going to line back up eventually. I don't know when. I don't have a crystal ball. It could be next week. It could be a month from now. It could be at the May Fed meeting and Jerome Powell decides to cut rates and QT. I don't know exactly. You can listen to a bunch of episodes we had earlier this week, specifically with Kyle and Benjamin Cohen, if you want to understand the macro stance. But when macro does come back, we all know Bitcoin will run. What runs next? I believe very strongly that DeFi is set up to run next. So today's conversation is really going to be a look into DeFi. What are institutions doing with DeFi? How are they going to interact with DeFi? What's going on with the market structure bill in the US and the stablecoin bill, and how that impact the large DeFi players? To break it all down, we have Kain Warwick, founder of Synthetics, also founder of Infinex, leader in the DeFi space, and just a gigabrain who really understands how we are going to take DeFi to the masses. Before we jump in and hear from Kain, if you guys want to do me a favor, hit the like button, hit subscribe wherever you're listening, especially during these red times in the market. And a little bit of extra love makes a big difference for us. Today's episode is brought to you by MoonPay. Trade crypto fee-free and fast on your own terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Kain, welcome to the Milk Road Show.
Thanks, Jay. Thanks for having me.
Yeah, absolute pleasure, my man. Okay, let's start off. I mean, we got to start off with the news of the day. I'm going to bring up here the tweet, or the Truth Social tweet. I don't even know what you call it over on Truth Social, from Trump. So here's what he said, and I mean, it's just classic Trump. I'm going to kind of read between the lines. Basically, he said, "I'm raising tariffs on China to 125% effective immediately because China is fighting back and throwing tariffs on the US. And so he's gotten into this tariff war with them. Really, only thing that really matters. So hopefully that gets resolved soon." Then he said, hey, there's 75 countries that are willing to negotiate. They're not going to tack on reciprocal tariffs on top of the tariffs that I'm saying going to put on. So for those countries, we're going to pause for 90 days, but still going to have reciprocal tariffs of 10% effective immediately. So, I mean, basically, long story short, pause, 90-day pause. Market responded well. Everything is green. All of a sudden, we're back up after a scary few days there. We were getting into some dangerous territory. Kain, what's your thought on macro markets right now?
I mean, there's so many different things that you could sort of take away from this, right? I think the last probably 72 hours, I've seen every possible narrative, every possible interpretation, every different take, counter takes that you can imagine. I think everyone's trying to figure out what's going on here. I think that for me, the crux of it is that we are going through something that is very unusual. That's the takeaway, right? This is not a typical situation that we're going through right now, and so there's a lot of volatility. There's a lot of uncertainty, and for traders, that's great. Volatility is great. That's what traders are looking for. For people who are either builders or long-term participants in the space, the thing that I always say is you have to have conviction. In moments like this, where like the short time frame setup is so insane, if you don't have long-term conviction, it's going to be painful. And so that really is the question, like, where is your conviction coming from in the long term? That regardless of these kind of volatile times, that in the long term things will work out.
Mm-hmm. Yeah, it's really a moment of separating the signal from the noise for me. And It's very difficult to know what is signal and what is noise, especially with somebody like Trump, who's a master of creating the most amount of noise possible and getting the most amount of attention possible for it. But you've really, you've really got to step back and not get caught up in the noise, but at the same time, stay tuned in because so much is happening. We're in one of those times where one tweet, one comment can put us up or put us back down. And so you've got to stay in the game pretty closely right now. But then also, I don't know, like give yourself that separation so that you're not, in panic mode, and you can still like live your life and be a good partner to your wife or whatever you need to do at home, be a good dad, all of that stuff. Like it's tough out there right now.
It's distracting for sure. And again, I think it comes down to like, if you're a trader, this is great, right? It's hard, but that's where the opportunity comes from. If you are someone who is a builder in the space, or someone who is an educator in the space, or someone who is here long term based on a long term thesis that crypto is going to be transformative, then you really should just check out a little bit, right? Like the short term volatility is not helpful. And you can just kind of let it wash over you a little bit is kind of my recommendation. So the funny thing is, over the last 48 hours, we've got a large team here building Infinex, and I've had a couple of conversations, and a few all hands where I'm just like, this is fine. You can't control this. All we can do is keep building. All we can do is keep, delivering the functionality that we're trying to do. And if we do that, then we'll be fine. It'll all kind of wash out.
Mhm. And you've been through many cycles before. Like, yes, this is unusual in some ways, but it's also not unusual in other ways. There's always something like markets don't just all of a sudden puke. And in every cycle, there is a few pukes. There's a few big pukes, like Bitcoin being down 30% right now. It's not completely unusual within a bull cycle. Now, only time will tell whether, the bull continues as many people hope and still optimistically expect, and for a lot of good reasons, or if we actually are in a bear market and there is a shift and we can't pull out of this pain. It's difficult to say right now. I think there's still a lot of reason to be optimistic, but I think you nailed it when you said like, you've really got to zoom out and look at the bigger picture, unless you're like a day trader and you're trading like every day. But most of our listeners, I think now is when I worry, and now is when I get sick to my stomach, because a lot of people get so down and into despair and into fear, especially in moments like this when the rhetoric in the media is overwhelming, and everything you're hearing around you is so overwhelming that you can feel like you just need to like leave, but like leave for good. Nothing wrong with going and touching grass, but like stay in the game. Don't sell now, is what I'm saying. Like now is not the time to
you
sell.
You don't want to get shaken out by
No.
short-term volatility, right? Which is the other reason, sitting comfy in spot, even if your spot's down 50%, is actually fine, right? That's kind of the name of the game. And I think, having been through a number of cycles, the key thing is to not be in a position where you can actually get shaken out of a particular position, right? So avoiding leverage, avoiding, if you're a long-term convicted person in crypto, avoiding leverage is probably the biggest thing that I could recommend, because you can just ride it out. You can ride it out. You can kind of let the volatility wash over you and come out the other side.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply. Meet CS USDL, the stablecoin built for institutions and DAOs. don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. Yeah, couldn't agree more. Okay, let's shift from current macro pandemonium and shift into DeFi.
Sure.
You have spent a good part of your crypto career in DeFi, being a builder in the space. DeFi is as we see this shift from pumpamentals to fundamentals, and this thesis gaining more steam, it was really gaining steam early in the year, kind of has died off as tariffs have just taken over the entire narrative right now. But I really believe that whenever the noise and the macro stuff gets sorted out, we will see a return of the bull run. And when we see a return of the bull run, I think that the fundamental assets are going to do the best. And I think that where do you see the best fundamentals is in DeFi. And so that gets me very excited. Would you agree that you think that DeFi could be a leader in a rally when the macro turns around?
I think that the challenge for DeFi is, and this is something that I guess I've kind of come to realize this cycle, right? The challenge for DeFi is that many of us tried to pivot to this real yield narrative probably a little bit too early. When there weren't that, we were still in a market structure where most of the DeFi projects were extremely early stage, right? You're talking about startups that, were 1, 2, 3, 4 years old. There's no startup in traditional venture that 1, 2, 3, 4 years in is doing stock buybacks or dividends or whatever. It's about growth, right? And so I think we got a little ahead of ourselves. We were a little too convinced of our own amazingness, and so we were like, guys, we've solved this. We can get rid of all of the, to your point, pumpamentals, all of the, frothiness. We can just focus on the pure fundamental, returns that something like Aave or Maker, are generating. And on one level, that is true, right? But the problem is that I think all of crypto is still very much a place where people come for high variance returns. There's not that many people in crypto who are looking for a stable 3, 4, 5% yield. Eventually, that will happen. Like eventually, there's a convergence of DeFi and TradFi, and DeFi is just another kind of option in the menu of yield strategies and structured products and things like that. But today, the vast majority of people in crypto are looking for high variance returns. And so saying, hey, we've got this amazing 7% yield is probably not going to attract as much attention as it could and should. And if you look at DeFi Summer, why DeFi Summer works so well is you had crazy APYs that were based on pool twos that were super speculative. Again, the thesis was that all of these DeFi protocols would eventually supplant TradFi, but in the short term, it was a game of who can farm the most, what the crazy 10,000% APY is, etc. Because that's what the audience who was in crypto wanted. And I think the reality is that still today, the majority of people in crypto are looking for that kind of return. And if that's the case, then DeFi needs to kind of come to terms with that and figure out how do we offer higher variance returns. How do we go back to the old days of classic yield farming schemes and things that are high attention, because otherwise people will just go and gamble on meme coins. So there needs to be some balance there, right? If it's, hey, meme coins, crazy volatility, or 2.5% APY on Aave, the people who the audience we have today wants high variance. They want
Mhm.
a 10x or a 100x, right? 2.5% APY doesn't get you a 10x. Like you're going to be here for a century, right? So like we need to acknowledge that, I think, and we need to figure out how does that work. It's one of the reasons why I'm so excited about projects like Echo. Echo kind of restructured this early stage funding, and took some of the power away from VCs to allow people to potentially invest in the next Athena, right? At, whatever, 10, 50, 100 mil FTV, which is what people are looking for. That's what they want to be able to do. They want to be able to invest in this upcoming infrastructure that is going to give them, a 10, 50, 100x return. And they're willing to take that risk. That's why they're here. They want to take risk for high variance returns. So I think that dialing that in and figuring out, what our audience today wants, not what this future audience in 10 years of,
Mm,
structured products guys on Wall Street might want,
mm.
right? Like we have a different audience today. We'll get there. I'm very convinced that we will get there, but today the audience wants what they want, and we need to give that to them.
I want to chat about when you think we're going to get there and what it looks like when we get there and what institutions want in DeFi and if institutions will use DeFi. But first, what is Echo? Tell us a little bit more about Echo.
So Echo is started by Kobe. It's an early stage venture platform. You have to be an accredited investor, so you have to go through self accreditation or some kind of accreditation validation process, and they have deal leads. So they've got different groups that are closed groups where there is a deal lead who brings early stage opportunities to the group. And they've done some really good deals over the last like 6 to 9 months, right? Things like Mega ETH, Fogo. There's been a bunch of even Athena was one of the first deals. So there's been some very good deals that have been available through Echo, and that again is I think what people are looking for. They want to be able to get access to these early opportunities, which for a period of time was not possible. All of the price discovery was happening in private markets via VCs, and there was no opportunity for the average crypto participant who might have a net worth of $3, $4, $5 million, and they're an accredited investor, but they don't have enough clout to get into the Athena. So that's what Echo kind of solved, is the ability for many more people to be able to get access to these kind of deals.
Which really connects back to the original ethos of crypto, of what we were all trying to solve for, which was more democratizing access to these types of businesses early on. I mean, we've talked about the return of ICOs and tokenized stocks, and could you get in on that in the VC round? I mean, it sounds like Echo is doing exactly that. Incredible to see. So come back for a second. It's interesting to me. You you make a really good point that like the current crypto user does not want the yield that a lot of the DeFi products are offering. So why has DeFi focused so much on that yield? Is because they were building for the institutions and they're just not here yet?
Again, we just drank the Kool-Aid. Like I was one of the people that was really pushing this real yield narrative, right? We were looking for the new narrative. We'd come out of DeFi summer and we're like, okay, that was great. The party was fun. It was amazing. But like, what's next? Right. I think there was a sense we can't run that back. Like, there's no way that that's going to be.
I was just going to ask you that. So like, can you run that back?
I mean, people did try, right? There was DeFi 2.0, and then, there was algo stables. And so people did try to reintroduce high variance. But I think some of us, felt like we were in this world where we were kind of beyond that. Like that was the Ponzonomics and, all of the craziness that we needed to kind of build momentum around DeFi. That was in the past. Now let's move forward, right? And I think we were too early to that transition, right? We needed to embrace higher variance and volatility, more closely for a little bit longer. And unfortunately, what happened was DeFi got boring. And so DeFi got boring, and people were like, NFTs, I guess. And there was the NFT boom. There was the Alt L1 thesis. There was Terra Luna, which is interesting because Terra Luna was only 20%, right? But the funny thing about Terra Luna is that it wasn't even the yield. Like the yield was there, but it was the high variance return on the token itself, right? That was the thing that was keeping people interested. So people did kind of take up the high variance, high volatility, kind of mantle and run with it. And Terra was one of them. And again, there were a bunch of others as well. But we haven't been able to kind of recreate that. We haven't been able to rebuild that. And I think that that's something that's important. Now, the irony of all of this, in my mind, right, is that today, as we stand here in the current setup, the likelihood of TradFi adoption and the likelihood of DeFi and TradFi converging is higher in my mind than it's ever been. Like we actually have a setup now where we don't have regulators trying to destroy DeFi for the first time in 4 years. Like we're actually in a really good place. We've got really good technology. We've got a bunch of amazing primitives. The setup is amazing, but we're also now dealing with this crazy tariff war and global trade wars and all of this stuff. So that's kind of creating some noise in the background. But if you zoom out from that and ignore all of this short-term insanity, the setup today with this idea that we're going to get more regulatory clarity in 4 years' time, DeFi will be in such a better position. It just it's inevitable to me. I'm more convicted on that than I've ever been at any time. And so, yeah, we are going to need 3% APYs and 7% APY and 9% APY on structured products. And TradFi is looking for that, and we will have an audience for that. But we also need to address the audience we have today.
Do you have an answer to the question? It's just a difficult question to answer. But what is the? I want to talk about the institutional side, so we'll get there in just a second. But what can? Nobody's brought it up the way you have to me, and this is very interesting. What can DeFi do though to get this like crypto casino crowd back? Like is without running back the DeFi Summer 1.0 playbook?
Yeah, it's an interesting question. So one thing that I think that they can do, right, is for novel DeFi protocols to make the token available early to more people. Now, we've tried this in different ways, right? We tried this with airdrops, and Hyperliquid did a great job with this, right? They built for 18 months, did the airdrop. 30+% of the token supply went to people who were using the platform, and I think that created a really powerful flywheel. Not everyone can do that though. I think that's a hard kind of playbook to replicate. And so a lot of people have kind of gone, oh, I'll just do the Hyperliquid thing, but you can't really. They were coming out of a bear market. There was a bunch of setup stuff about how Hyperliquid did what they did that is again hard to replicate. But I think what people are looking for is access to tokens as early as possible. So finding ways to give people access to tokens early is the best thing you could do. Now, yield farming was that. Yearn, it was like, hey, you can get the token for free if you put money into this thing, and this pool 1, pool 2, etc. That kind of distribution structure is very powerful. Now, it didn't work for other reasons, but I don't think that we should be ready to kind of throw in the towel and say, as much as I'm not a fan of airdrops, I think that there is room for innovation in distribution strategies for novel, nascent DeFi protocols that will get people excited again. I think that is possible.
Mm-hmm. Yeah, I agree. I think it's a good take. We need more experimentation, right? We need more founders. We need more people trying this stuff.
So why did people stop experimenting? Because they're fucking scared. Mm-hmm. They're petrified. If I go and do this weird thing, you could get away with it in 2020, right? But in 2024, hey, I'm going to go and do this weird, option drop scheme. Like, no chance. Everyone who did anything, even if you were doing things that were not even that wild, they're getting their brains blown out. by regulators. Anyone who popped their head up at all. So everyone just kind of hunkered down and said, let's not, attract attention. But that's what you need to be doing. If you're building a novel protocol, you need to be doing wild things to get attention. And everyone was too afraid to do it. Now, I think that we're going to have a window of opportunity for the next, 2 to 4 years where people can do novel stuff. And we're going to see a lot of very interesting schemes for token distribution that will, reignite some innovation in that space. There was no innovation for a period of time, and that was dark.
Let's shift to institutions. You said before, and I think you might have just been casually throwing out 10 years, that it might take 10 years for TradFi and DeFi to converge. Let me just ask the first obvious question that I think everybody wants to know is, will TradFi use DeFi? Or is there a chance that they don't actually embrace DeFi and they do it on their own? They just use centralized rails, or they build their own rails internally in-house. How do you see, you talk to institutions all the time, so I feel like you probably have a good
I
idea of the landscape.
I look at it this way, right? Like, and I'm old enough to remember when we transitioned from, companies didn't have websites.
Mm.
Like all of a sudden everyone had websites, right? And it was like, oh, you can email the company, right? Back in the day. And so I look at it a little bit like this: in 1998, whatever, 1999, there were a lot of people who were like, will companies use the internet, right? And that just seems like in such an insane position in hindsight. Like, it's just a technology. It's a way of communicating with people anywhere in the world. Like, will people, like, some people might not, but they're gonna die if they don't, right? Like, it's just too good of a tool. And I think, interestingly, if you think about internet to DeFi to now, this AI wave that's happened over the last 2 or 3 years, it's kind of a similar thing. Like, there are people wandering around in the world right now that are like, do you think companies are really going to use these AI chatbot things? And it's like, bro, like if you don't,
Yeah.
right? Like, what are you talking about, right? And the funny thing is, I've noticed in my own life, there is a huge divergence in people, right? Because one of my jobs as a founder is like noticing who is most effective, right? Who is having the biggest impact on whatever it is that, whether this is a portfolio company or Infinex or something else, right? And I have started to develop a heuristic where I can tell the type of person who uses AI on a daily basis, who's actually using the tool. They are a more effective human being, and it's not even close, right? Like, and so I've started to kind of be like, this person uses AI. Like, you can just tell that they're someone who's using the tools that are there in the same way that someone was using the internet, right? They would just know stuff, and it was like, did they read that in Encyclopedia Britannica? Like, how did they? How did? It's like, oh no, there's a website where all of the information is, and you can just go and read it, right? And so there was a period of time, I think, in the early internet where early internet adopters, suddenly they were just more effective at understanding the world. That's what's happening now in the world. And if you go just one kind of technology revolution back, which is decentralized, kind of payment technology, right? What Bitcoin kind of ushered into the world. Will companies use that? Is in my mind like just such an obvious, inevitable thing. The question is, how exactly will they use it? That's less clear. But it is an enabling technology that allows for people and companies to be more effective, and so of course they'll use it. Of course, like the successful ones they'll find a way to extract value from it, and they will be more effective, and they'll outcompete. That's why we have markets.
Mm-hmm. Yeah, and they will get an edge that allows them to continue on the same way those who adopted the internet were able to adjust and continue on and use the tech to improve. What are, I think you teed up my next question well, which is the how will they use DeFi? What are the Give us some example. What are the different ways that institutions are thinking about DeFi? What do you think is that going to be the likely how? And maybe maybe there's certain things that you think they might do sooner, certain things that you might think they're waiting for regulation to do.
So we have we have representations of ownership of things like equity in a company, right? And the technology to represent the ownership of equity in companies has evolved a lot over the last 100 years, right? From paper to, through like there's been a number of iterations, right, in how these things are represented. Um, Tokenization of equity is like such an obvious improvement. It's just like so obviously an improvement, even whether it's tokenization on a centralized ledger or some kind of like consortium chain or something like that, right? It is just such an obvious better solution to the problem. So it's like you have to have a pretty strong thesis for why a clear 10x improvement in the technology is not going to get adopted. And now you could have, I think, 2 years ago had a decent thesis, which is regulators are so against it that it's just never going to get adopted, and people are too fearful to try it, and institutions are worried about even being seen to be involved in it. That thesis hasn't played out very well over the last 6 months, right? So now, what's your thesis? Like, what is your justification for why every single equity in the world is not tokenized? You got to have a pretty compelling theory there, and I just don't think there is one.
When they do get tokenized, because I agree, it's coming. The one thing I wonder though is, let's say it comes quickly. Let's say we get the market structure bill this year, as everybody seems to expect right now. A lot of people saying we're going to get it like in the first half of this year, possibly,
Come on.
and we start to get tokenized equities. Who's going to be buying these tokenized equities though? Like, are institutions going to use tokenized equities? It feels to me like it's just going to be crypto natives, because those are the only ones that are on chain right now. And we actually still have to wait for the better UX to come in order to bring on users that want to use an app that allows them to then go purchase tokenized equities.
Yeah, I think the tokenized equities thing, as it's kind of proposed now, is a bit of a red herring. Like it's kind of like a delivery mechanism for equities, but there is an expectation that it's kind of at the margins. You have tokenized equities, but like there's still all of the actual ownership registers are still held by the deposit corporation, right? And that to me is again a transitional phase, right? Like what tokenized equities are is kind of the canary in the coal mine of this transition from how do we represent ownership of a company from some books in a basement somewhere, right, to a token on a decentralized ledger. Like but it doesn't really work until you kind of move from one technology to another, right? Like going from paper records to in a database, right? Now going from a database to a decentralized ledger of some kind with tokenized representation. That's the transition. So until that happens, then it's sort of just like a weird thing that people are doing, but it hasn't really transformed the process, right? It hasn't created efficiencies that and changed how we actually interact with the concept of ownership of a company, right? So I think that's the thing that needs to, that's why I said 10 years, right? These things move slowly. I think 10 years from now I can imagine a world where all of equity ownership in the world is tokenized on distributed systems, and that's just how we do it. That's just how we do it. Now, the question is, what are the kind of implications of that? If that happens, okay, well, all of a sudden, anyone anywhere in the world can access that, right? And so, there's the question is, okay, if we were to enter a world where all company ownership is tokenized, and when you go and register a new company, you're issuing a token, right? And it's a certain type of token that doesn't trade on public, um, exchanges yet, and there's some things you need to do in order for it to get to that point. So like once you kind of reimagine what the world looks like when it's powered by that, you get a very there's all of these things that kind of fall out from that.
Just the access alone, approximately, I think, 1 billion people in the world can access investments on the Nasdaq. 1 billion, that's it, right? Like, think about that alone. If you could open that up through tokenized equities and have access to all humans, all 8 billion, like that's a 8x of the market alone. That is a big deal, right? So I can see the path. Do you think there's just as we're having this conversation, a thought's popping up in my head, which is like, is there a risk that that there's this lost years of DeFi right now? I'm being a bit brash when I say that, but if if DeFi can't figure out how to attract the crypto crowd that is chasing the higher yields and the higher returns, because we don't have enough innovation happening there, and if the TradFi crowd is going to take 10 years to get here in a meaningful way, like I know they're here in some ways now, um, is there a risk that we could go into like a slow period? I know stable coins, and there
I
is
mean,
areas of DeFi. I guess we're there right now.
like Degen Spartan's prophecy of the 3-year DeFi bear market, right? It's turned into a 5-year DeFi bear market, really, right? He undercooked it. So I think there's like, it's not just a risk, like that is the world that we live in today. And yes, there are some great examples of amazing DeFi protocols, things like Aave, etc. There's some really cool stuff happening on Solana, but we are not even in the top 3 narratives, I would say, right now. Like DeFi is not in the top 3 narratives. And so then the question is, okay, if DeFi is about facilitating transactions in existing crypto tokens, that's a very small subset of the market, right? My bull case for DeFi is that it is the core infrastructure that when you do get tokenized real world assets of various kinds, and when the world does pivot to, well, obviously everything needs to be tokenized, and everyone kind of gets that, then all of a sudden Aave looks like 1,000 times better. If you can, if you're doing tokenized loans against your Tesla shares, right? When Musk is borrowing on Aave against his Tesla shares, that's a very different world. But it's a world that's like easily imaginable, right? Like you just have the token and the trades, and there's liquidity, and dexes and sexes and all kinds of places, and we've got the Nasdaq DEX. Then yeah, of course you would go to Aave to borrow against your equities. It's so much faster. It takes 5 minutes to go and borrow $10 billion against his $200 billion Tesla position. Of course.
When we say it like that, it sounds so obvious, right?
It is fucking
It
obvious.
is.
Like it could not be any more obvious. Like all it takes is for people to realize that email is useful. Like if you go back to like these email things, like I can just call someone. Like why would I I don't know. Like I get maybe there's some weird reason why I might want to send an email, but then it's like the world transforms and everyone uses email, and calling people is fucking weird. Why would you call someone? And just the world transforms, and it's like, wait, we used to keep records of companies on sheets of paper in a basement somewhere. Like that's wild, right? Like why? Like why did we do that? Why didn't we just tokenize them?
How much of an impact will the legislation that is currently being worked on in the US, the market structure bill, stablecoin bill, 2 stablecoin bills, I believe, how much of an impact will that have on DeFi? Is that going to be large tailwinds? Is there a lot of institutions waiting on the sidelines right now in your mind?
I think it's 2 things. One is it once we actually start to get some rules in place, and there is like genuine traction, not just noise, and maybe it's going to happen, whatever. All of the people who have been in Washington advocating for the last 3 or 4 years for DeFi and for crypto more generally, it's going to be a huge validation of all of that effort that they put in, and it's signaling. Suddenly, the legislature is signaling to the market, this is an okay thing to interact with. We are starting to figure it out. That the signal for the last 2 or 3 years has been, if you touch this, we will nuke you from space. Those are two very different signals, right? Like, so I think that regardless of almost what's in the bill, the signal from even the ability to get legislation passed is the most important thing.
When you look at the legislation, any concerns, red flags that you see, or drama that you see happening as they work their way through figuring out exactly how this should be put on
Well,
paper?
so here's the funny thing, right? Like there are entrenched interests in crypto that have differing opinions of how things should play out, right? You've got yield-bearing stablecoins and non-yield-bearing stablecoins. Wouldn't it be really convenient for the non-yield-bearing stablecoins if yield-bearing stablecoins were not allowed? So you know that would be a great outcome, right? And so there's a tension there where there are different factions within crypto that are trying to this is an opportunity, right? Like, and unfortunately, in markets, legislation is one of the weapons that companies and projects wield to get what they want, right? So we have opposing forces of centralization and decentralization. We have opposing forces of yield bearing stablecoins. Not there's all kinds of factions that are kind of fighting out to try and figure out how this is going to play out. And I think there's people in crypto who look at that and say that's bad, that's like just net bad. We shouldn't be worried about what some particular legislation in some particular country is doing. We're building decentralized tech that is going to be able to bypass all of that. But the reality is, we've seen for the last 2 or 3 years, that wasn't working out very well for us, right? We can do it, but the headwinds are crazy, right? Like, it's not to say that DeFi can be stopped. You can't stop DeFi, but it would be so much easier if we could just go and have a conversation with people without being worried that we're going to be thrown in jail, right? So that to me is the shift. Is like you can kind of say, oh, all of this realpolitik, it's bad, and we shouldn't worry about it, we shouldn't engage with it or whatever. But I think there is a value in being incorporated into the rest of the world and not being an island unto yourself.
Hmm. Hmm. Yeah, it's a great point that you really do have to balance the two. Okay, final topic I want to touch on before we wrap here is your vision, and the vision of Infinex for a while has been to simplify UX for DeFi. That is a core challenge that we have. I mean, across all of crypto, but particularly in DeFi. How are you solving that? How are you focused on solving that? What are you doing? To walk us through some of that stuff, because I know you guys are up to some pretty cool things that are really helping improve this problem.
I mean, all of the ways. Like, this is full court press. We're throwing everything at this. We don't necessarily know what the optimal solution is, right? But we know that there is a solution there. And so we're looking at ways of building first-party applications inside of Infinex that allow you to swap and bridge. So we have this Switch product that supports a bunch of chains, a bunch of assets. Is gas abstracted, is chain abstracted. You want to buy Sonic and you've only got Sol. It's just a couple of clicks, right? So that's one approach. That's a
Which is insane, by the way. I've got to. I don't think a lot of. I'll bet you a lot of our listeners have not heard of Swidge or used Swidge. It is. This is big. This is big, right? It's not
it
getting.
is,
It
yeah.
doesn't get a lot of attention, but
It,
this
it
is. This is
it's
what
kind of,
everyone wants. This is what we all want. I don't want to ever think about bridging ever again.
yeah.
Uh,
It
it
explains to me that we built this, and for whatever reason, we haven't necessarily communicated it as effectively as we could. But my view is a little bit that it's very difficult to get attention in crypto if you are not buying attention, even good attention, right? And I talk to my portfolio companies about this a lot, right? If you don't have a token, or you don't have a point scheme, or you don't have some incentive scheme, right, and all of your competitors are doing that. Let's imagine there's 5 different dexes out there, right, and 4 of them have some kind of incentive scheme, referrals, all of this stuff, and one doesn't. The one that doesn't has to be so much better than all of the others for people to engage with it. And this is part of the growth strategy of crypto, right? Like it's an extremely competitive growth industry, and the growth hacking that goes on is far more aggressive than what you see in Web 2. And so I think Infinex has not gone out of its way yet. We haven't been comfortable yet to really go out and buy attention. I think we're getting close to being able to do that, and it will be kind of wild, right? Like once people are paid to pay attention, which unfortunately is kind of for a lot of people the only reason to pay attention is if you're being paid to. Then there's going to be this kind of parabolic thing where people go, how did I not know? And this is the funny thing is, I think a lot of your audience probably has seen something about Infinex, but it hasn't been sufficiently compelling for them to go and set up an account and try it and realize how good it is. So we need to make it sufficiently compelling to get them on the platform. That's the goal, right? But we've been a little bit cautious about, we're not quite ready, and we got time. We're not in a rush, but we're about to kind of switch on just the early incentives to really juice this up, and I think that we're going to see a lot of traction from that.
I think that the risk of doing incentives too soon for a builder and for a founder far outweighs the risk of not doing it in the beginning. And we've seen that again and again, where it is very, as you said, it in crypto and in all new technology, there is going to be competition that uses incentives to get marketing and get attention, and that's just like the way it's going to be. And you can really get caught up in thinking that that is the only playbook, and if you take that playbook, it can backfire in big ways. Whereas if you build slowly and you build properly, and then you turn on incentives when you have a product that works, it is much more effective. Now, it doesn't work for everybody. It can be difficult in the beginning to get any attention, and so maybe you do need some incentives. But shout out to you for being patient, I think is what I'm saying, because it's not easy to be patient when all your competitors.
Yeah, it's not easy. And look, I'll be honest, like for me, it is easier for me than it would be for a first-time founder, right? Like I can just yap on Twitter and people will kind of semi-pay attention at least, right? We've got some traction just from that alone without actually providing huge incentives. But like there is a ceiling of how much attention you can get without incentives in crypto. It's a fundamental limiting factor, right? Like even the best products like Hyperliquid, if they didn't have a point scheme that turned into a huge airdrop, they would have struggled to get that. All things being equal, their traction would have been 5 or 10 times less, even with a great product. So that's one of the just harsh realities of crypto is it doesn't matter how good your product is, it's going to be 10x better if you're paying people to use it.
Mm-hmm. I mean, just bringing up the Hyperliquid example, we have seen that with every perp DEX before them, right? First it was DYDX, then it was GMX, and then it was Hyperliquid. And Hyperliquid does seem to be a great product that has staying power, but time will tell. There's certainly that playbook continues to play out.
Well, here's the funny thing. I tweeted about this right after the airdrop, right? I said, I'm looking forward to, where the locusts go next, right? Because there's a group of people who are mercenary farmers whose only sole job, right? And the problem is it's hard to actually differentiate them from like a real loyal user. They're like replicants or something, right? Like they look like a normal person, a normal user or whatever, but there's actually nothing behind it. And so they are incentivized to not just use the product to farm incentives, but to also talk about how much they love the product, sort of irrespective of any actual allegiance to it, right? Like it's their job. And so what we haven't yet seen for a couple of weird reasons maybe is like a new perp DEX. When the new perp DEX on a new chain launches, that's when it's going to be very interesting, because all of a sudden they're going to have blue sky, clean incentive structure to give out points and tokens and whatever. And then that's when you'll really tell how much do people love Hyperliquid. And again, this is not to say Hyperliquid is not a good product. It's a very good product, right? But it's incredibly hard post incentives, post token to compete with a pre TG product. And so, yeah, I've been really curious to see how that'll play out. We haven't yet seen the Hyperliquid killer, but there's one brewing somewhere. Someone's building a Hyperliquid killer, and when it comes out, it's going to be very interesting on the timeline.
Yeah, I feel the exact same way. It'll be very interesting to watch. Kain, thank you so much for joining us today and for
Thanks for
breaking this all down. Really appreciate your time. Shout out to your team and everything that you guys are building, and for being so dedicated to furthering DeFi and crypto.
Thank you, sir. Appreciate it.
What's up? You're still here. Giddy up. I got to tell you guys about Avalanche happening in London, May 20th to 22nd. It's going to be a one-of-a-kind crypto conference / retreat style experience. Very unique, very intimate, much different than some of the larger crypto conferences out there. It's going to be developers, founders, investors. Great place to really connect with some of the brightest minds in the space. Don't miss out. Hit the link in the show notes. Grab your tickets today. Hopefully we'll see you there. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.